Welcome. In this video, did Zbcn coin price make a bullish pattern? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When the chart is analyzed, it is clearly seen that the current price action has been in a downward trend for some time and has formed a clear downtrend structure in this direction. This trend has taken shape over time as the price has made successively lower highs and lower lows. In technical analysis, such patterns are critical for traders, indicating that the market is temporarily weighted towards sellers and the price is under pressure. However, every falling trend structure carries with it a potential turnaround and bullish opportunity, because in the nature of technical structures, every downtrend ends at some point and can be replaced by a bullish breakout. At the moment, the price is very close to this falling trend line, and price movements at this level are extremely critical. Such falling trend lines often work as resistance zones that traders watch carefully. This is because they are areas where the price has bounced back many times in the past and therefore act as a psychological barrier. However, if the price manages to break this level to the upside, it's not only a break of a technical pattern, but also a positive change in market perception. This breakout is a strong indication of a shift from sellers to buyers and means that the price may test new and higher levels in the coming period. Breaking downtrends is considered a highly reliable bullish signal in technical analysis. This is because such breakouts are usually accompanied by strong volume, and we often see the price gaining momentum and moving up quickly after the breakout. In this case, the first close above the downtrend is a positive confirmation point for investors. If the price retests this level and stays above it, it reinforces the strength of the trend breakout and sets the stage for the start of a new uptrend. Therefore, if the price, which has approached the current falling trend line, crosses it in the coming days, a journey to new highs may begin in the medium and long term. Downtrend breakouts are also important for pattern-based targets. This is because in technical analysis, when a trend line is broken, the price usually tends to rise to the previous highs after the breakout. In this case, if the price breaks the downtrend, it has the potential to head towards the horizontal resistance zones that have been tested in the past. If these areas are also breached, new highs may be inevitable. Therefore, a break of the current downtrend could herald not only a short-term rebound, but also a strong medium-term bullish move. At this point, traders should pay particular attention to the candle structure and trading volume at the moment of the breakout. If the price breaks the trend with a strong green candle, and the breakout is supported by high trading volume, this confirms a very healthy breakout. Such a strong breakout is often referred to as a breakout, and increases the potential for the price to then move to new highs. A possible subsequent pullback is considered a retest, during which the price returns to the level it broke and takes support from there, leading to new buying opportunities. This scenario is a bullish structure that is often encountered in technical analysis and is considered quite reliable. But we can't decide the analysis with trends only. Let's look at other metrics. Stay tuned. A careful look at the chart clearly shows that the price action is starting to form a classic and very strong technical pattern called head and shoulders. This pattern is known as a trend reversal signal in technical analysis, and it is considered valuable and promising enough to signal the beginning of a bullish trend, especially after a downtrend. This pattern, which is currently forming on the chart, is a strong basis for a positive scenario, and when evaluated according to the rules of technical analysis, it could herald a potential bullish wave. Drilling down into the details of the pattern, the left shoulder area has been clarified by the initial rebound after the decline and the subsequent correction. The head is the deepest part of the pattern, marking the low of the market at that time. This head is usually formed by a sharp decline, and the subsequent rise is the beginning of the process towards the right shoulder of the structure. At the moment, price action shows that the right shoulder is in the process of forming. This indicates that the H&S pattern is almost complete, and the breakout phase is approaching. According to technical analysis, if the neckline breaks upwards after such structures are completed, the pattern becomes active and the price is expected to go up significantly. One of the most powerful aspects of the inverted H&S pattern is that it tangibly reflects the psychological tendencies of traders on the chart. The left shoulder formed by the first bearish move indicates that the market is still indecisive and selling pressure is still in place. However, the deep drop at the head is where traders panicked and the selling intensified. But the sharp reaction buying that followed this panic selling indicates that there is now a bottom in the market and buyers are on the move. This movement, along with the formation of the right shoulder, signals that more traders believe in the upside and are getting involved in the market. the fact that the current price is moving in the right shoulder zone can be considered as an important indicator that investors have started to develop a buy strategy. The most critical level for the inverse H&S structure to fully work is the upside break of the neckline. This line is usually formed by connecting the peaks of the left and right shoulders. If the price manages to break this line strongly, this breakout is perceived by the market as a trend reversal, and buying pressure can increase significantly. In H&S structures, if the breakout occurs on volume, this increases the validity of the pattern. After the breakout, the target is usually moved up by the depth of the head. That is, whatever the distance between the bottom of the head and the neckline is, this distance is added upwards from the breakout point to determine the potential target level. In the current outlook, this pattern is almost complete, and price action seems to be moving in the final phase of the right shoulder. This phase is usually characterized by indecision, as traders question whether the breakout is coming or not. However, as the price approaches the neckline and breaks the pressure upwards, there could be an increase in buying. In particular, the first bullish candle following the breakout is considered a confirmation of this structure and a strong signal for traders. If such a technical structure is completed and breaks upwards, a significant price movement can be expected in the short to medium term. Another noteworthy aspect of inverted H&S patterns is that this structure is often seen during long-term trend reversals. Therefore, such patterns are not only considered as a short-term bullish prospect, but also as an indication of a complete trend reversal and a prolonged bull market. This allows traders to hold their positions longer and be patient. If the current structure is supported by volume, there is a high probability that the price will break the neckline and reach the set target. A careful examination of the chart reveals a falling trend structure that is evident in the RSI indicator. This structure is the result of the recent pattern of RSI peaks and troughs, which have been consistently occurring at lower levels. Such falling trend lines can carry a very important signal, especially for traders interested in technical analysis. This is because they represent not only a technical boundary, but also the current psychological state of the market and the direction of momentum. A downtrend in the RSI indicates that price action is trying to move up with weak momentum, but each time it meets resistance and turns back. But this doesn't last forever. As in many instances in technical analysis, such falling structures will eventually break, increasing the likelihood of sharp movements in the direction of the breakout. Currently, the RSI is very close to this falling trend line. When it reaches these levels, traders often keep an eye on whether this trend line will break, because such a break in the RSI often reflects positively on the price. If the RSI breaks the downtrend to the upside, it indicates that momentum is starting to gain strength and there could be increasing buying pressure on the market. This is interpreted as a positive technical sign. Especially if this breakout is supported by volume, there may be strong signals on the price chart that an upward movement may begin. This could open up new buying opportunities for traders. Trends are very important with the RSI indicator. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.